Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy in the investment market so you can understand really what we're seeing in the global landscape and also what we're seeing with this volatility for 2016. While again, nobody ever likes volatility, this is normal. This is not higher volatility, nor is it less volatility than we've seen really in the last 30 years in the investment business. Ultimately, what really drives big volatility or downward spikes in values of portfolios are recessions. I can tell you currently from all the research we do internally and all the outside independent research we purchase as a firm, none of those sources, internal or external, are showing signs of a recession. And these are usually pretty good sources that have worked reasonably well over periods of time. So again, remember, a slowing economy temporarily is not a recession. China is not going out of business. A lot of people say, well, isn't China's economy slowing down significantly? No, not really. And we've known China's economy or GDP has been slowing because they've telegraphed that, and we've known this for over 3 years. They're changing from a manufacturing economy to a consumer-led, which will ultimately stabilize their GDP over time. We don't see a recession in the U.S. We don't see a recession in China. And generally speaking, about 2/3 of the world is in an expansion mode and about 1/3 is in a recessionary mode. That's pretty statistically normal over long periods of time. So we have a slow growth economy. We've had kind of a mild patch in the last, let's say, quarter or so, not negative GDP. Ultimately, as we continue through 2016, we see hopefully better times ahead. Volatility has always been here. It's not going away. Expect it. If you're an income investor or you need income monthly or quarterly from your portfolio, we manage that well for clients. But ultimately, volatility is going to be here. I think, again, what hurts investors is too much news, too many news sources, and they repeat the same news throughout the day dozens and dozens of times. And I think often investors associate negative headline news with a recession, or every time the market goes down 5 or 10%, we're in the next recession. That's simply not the case. So remember, fundamental qualities of our economy have not deteriorated and are not going into recession or pointing to recession. We are in a slow growth mode. We should be growing faster, and I've talked about this many times over the last few years. Our government holds us back. Now, while we do have a presidential election coming up this year in November, hopefully people vote wisely, and hopefully we get a change from politicians to more business people that ultimately may help grow our economy better. There's two areas that are really concerning me in the U.S. economy and why we're growing so slowly. Number one is a horrendous tax code which levers taxes in the wrong way to businesses. They can't expand fast enough. And of course, over-regulation by government. Both of these are caused by government, and both of these can ultimately be fixed if we get the right president in the White House. We need to grow our economy faster, and we should. And if we do, all of these issues that we often hear about on the news will start to abate because you can pay down debts and deficits. You can have a better health system, a better Social Security system. I ultimately believe 2016 will end a decent year, and I ultimately believe if we get the right person in the White House, our economy can grow significantly better for years, if not decades, to come. If you're a client of our firm and you have any questions, please call me directly. If you're not a client of our firm, it's time you became a client. Call my firm for consultation. There is a difference. Have a safe and profitable day.